friends, good week. How are you? Vladimir here with you, and this weekly review is recorded from Hungary. I'm right now in Kecskemét, holding our seminar, mine Laszlo's seminar. It's going very wonderful, and it's a pleasure to hold a weekly review from here. That's the end of November, and the first week of December is in front of us, and as we know, December is the last month of trading. Normally, on every normal year, December, well, at least the first 2 weeks of it are still tradable, but it seems that the current current situation in the market will cause 2012 end of year been zigzagging. The main reason for that is, of course, as we know, the fiscal cliff. Yes, there are many conversations about that, many discussions about that. One day we hear that they are coming to the solution. The next day, the next day they say that nothing is going on, and Biner, as we remember, said that there is no progress and blamed Obama. Obama from his side blamed the Republicans. As for now, it feels like a children game. Everyone tries to blame his opponent or whatever it is, and that's not the way to solve such serious issues. They have 1 month to go. I still think that they will find a solution. The question is how the market will get a solution. What it means, do not think about holding some long-term journeys. I still think that we might most likely find some opportunities on the first 2 weeks. The last 2 weeks most likely are going to be very low volumes, but still remember to be very careful this period. Take very small trades. No need to overexpose yourself. Really, there's no reason for that. And well, I said enough. Just be careful. Just trade conservative. All right. Take very small lot size, and because it was fabulous here, and we do not want to ruin that by 1 month, which even most likely will not be full months. So what opportunities we do have? The first thing I have on my list to follow for well, most likely the upcoming week is the euro dollar. It should be relevant for Monday. We can see we have a beautiful double top, kind of double top. It's around a very strong resistance, and we have a beautiful regular divergence here. This is the first time we get a candle pattern, and I'm talking about the current harami, because 2 last patterns we have had were evening star. Evening star is not that reliable pattern. Right now we got harami. It means the euro dollar should make a stop here. We can protect ourselves with a stop loss above the last high, or just an exit plan. If the last high will be broken and the prices will close above, then we will get out. Our target could be, well, based on the double tops. That's the, if I say double bottom before, I'm sorry, it's double top. I'm just tired after today's presentation, so I'm sorry in advance if I make any mistake. So anyway, that's how it should be traded. As we know, based on regular divergence and a double top, this should be the first target around the last support. That's around 129, and the stop loss should be set something like 130.55. Should be enough, or just an exit plan, which is my preferred. If it will close above and hold above, then just get out. And this is the first target, and of course, if you pay attention, that could be very interesting, because, sorry, that's not the line, because if we draw a trend line here, right, and the prices go this way, they almost will counter the trend line. So that could be very interesting sign. Now, the most important thing to pay attention to is the angle, because that's how it happened previous time. That's what we expect to happen this time. So in other words, the euro dollar should reach the target up to the let's see, if today is the first, then it's open on the end of second, third. So if it starts from third, then today's up until the 5th of December, and maybe even give it like end of 5th or beginning of 6th of December, the target should be reached. But be careful, as I said, because the market is zigzagging. We saw that on the last week very well. So if you do take this trade, just take it very small risk. No need to risk all for such trade. I just want to remind you that the extra confirmation for the euro dollar is that we have a channel here, right? On a daily trend, we have a channel, we have a hidden divergence built already, so technically it should make the move. But remember, the market could be not technical such period, and that's why we need to protect ourselves very carefully. That's about the euro dollar. The next pair will be the pound dollar, and for this one, I think it's better to wait for the break of this trend line. It turned to be a very clear bump and run pattern. Right now it's building some triangle or so, breaking below this level, breaking below the last support, and hold below. Most likely will open the doors for duplication of this depth here. Okay, so something like that to the next support. So break below this trend line and the support. Of course, RSI will most likely go below 50, well below 50, and that would open the doors for 159.40 to be reached as a first target. And the final target could be that trend line between these two lows here through the spikes. So it could go 1, 2 duplication. We could go again below 159 as for final target. So that's about the pound dollar, and if it turns around and break up and hold above this resistance that it built during the last week, then most likely we are going for the next resistance, which could bring us even 1 to 161 plus 161.30, 161.50. So and then it will turn to be band to band move on a daily chart. So we are kind of on a pattern here inside a 4-hour chart. Breaks below and we get a move most likely, and break above this pattern, and most likely are moving to 161.20 to 50 range. And well, that's the technical opportunities we have. I've been asked about the euro pound for the last week, and I have to say that I don't completely understand the full picture here. There's no hidden divergence on daily. Yes, there are resistances from one side. It's not that clear right now, even though it's kind of dancing on a trend line here, right? So technically it has the divergence on the 4-hour chart, and it should go down. I would act careful here, and I would be waiting for a clear trend line break. For example, we might read the last moves, right, something like that, as well as a wedge or so. A break below that could open the doors for the pair to drop down again to 0.8060 or a bit lower even, and a break below that most likely will open the doors for us, for the price to go all the way to this double spike trend line, which means something back to 0.8020. But again, I'm not quite convinced about this pair behavior, as on a daily chart there is no clear hidden divergence, no clear continuing divergence, nothing very special. So I would prefer to be very conservative here and wait for a clear break of the patterns we just talked about, then aim the targets to 0.8050, 60 range, and then 0.8020 as a potential final target. That's about the main euro pairs now, and the pound dollar, of course. Now a few words about the yen pairs, as well, it's still relevant. We have been following them for 2 weeks now, or even a bit more, and everything begins to be technically correct, but we just need to remember we are dealing with a daily chart, and it could push higher even, just in order to create stronger divergence on a daily chart, stronger direct move from band to band, maybe even duplication before it's making a strong drop down to correct itself. Technically, on the 4-hour chart, there's a beautiful divergence already, and it has to push down. But based on daily chart, we have a resistance. It tried to spike above it. RSI still has a bullish slope here on the current scenario. So I would not be surprised from one side if it pushed higher. I would not be surprised if it creates a bearish candle pattern and drop down to the 20 EMA of the daily chart first of all, and then maybe even all the way back to the biggest trend line, and from here it could go all the way to 128 even. So the best way to trade such situations as investor style, just hold positions on the resistances. We have resistance right here right now. We have one higher around 133 plus, and if we put the weekly chart, on the weekly chart we have one deeper, very stiff one. It's around 135, 136 range. I'm not convinced it has the power to go there, but again, as I said, it could go and play around, and that's why investor style is most recommended. It could take time, it could take few days, or it could take several weeks until such things happen, and I do think it's going to build itself right here, maybe on the next candle even, and start to drop down. And that's why investor style is much more relevant and welcomed here. Same with the euro yen, which just reached its very stiff resistance on 107.50, spiked through and kind of retraces. Every push up will take the RSI close to 80, and with a continuing divergence that could be created on a daily chart, it could create a beautiful band to band, maybe even duplication, and then most likely it will build a beautiful correction down. On the 4-hour chart there is a divergence already, so exactly as the pound yen, which I explained earlier, it could go and create the candle pattern, the next candle or the next 2-3 candles, and start to drop down. It drop down to below 105 on the 20 EMA, and then maybe even all the way back to the 200 moving average or the support range between 102 to 101. That's definitely a possibility for this pair. Now that's the main opportunities we have. We have the yen pairs. Of course we can go for Aussie yen and Kiwi yen. They will be just the same, so I just don't want to cover all of them. That's why I explain pound yen and euro yen as the main pairs. But it's relevant everywhere. Swiss yen, CAD yen, Kiwi yen, whatever you just choose. A few words about the Aussie Canadian. I've been talking about that for a while, but from a beautiful divergence it turns to be a flat move. So if you hold this pair, my suggestion is to get out. I don't believe it. I closed my pairs, my trades here for this pair. Also investor style, of course, and as I always say, if it goes flat, no need to fight, just get out. And that's what I did. Okay? And that's what I recommend to you. If you hold this pair, from my recommendations 2 weeks ago or 3 weeks ago, you're supposed to be with a small profit or big or around break even now. That's why it's better to get out and don't fight this pair. That's pretty much all about the major things. There is maybe interesting thing coming for the Euro Canadian. I don't see that happening this week. I think it still could go for 131 or so, and that's why. Sorry, I'm still cold a bit. That's why I prefer not to touch other pairs and stick with the major and the yens. Few words about the gold and the silver. They are completely not technical. They are not behaving technical last period. So my recommendation: avoid trading them. I don't have any opinion for them. I really don't. I think for long run it's up, but for the short run, zigzagging up and down, up and down, up and down, and that's not where I want to be. That's not how I want to trade it. So my recommendation: stay away of those. Now, a few words about indices, which, as we have been talking about that on the last weekly review, they have a beautiful hidden divergence created already. So, from my point of view, it's only a question of time until the index is creating a top and begins the down move again. We've been talking on last weekend that it was here, and it's going to push back to the 20 MA at least, most likely even the new low. It did to the 20 MA, it even spiked below, then retraced all the way up, but the hidden divergence is not gone. It's there yet, and here it is. Right? That's a hidden divergence. It's very, very clear from between every 2 points we can find. And on the 4-hour chart, there is a beautiful, beautiful divergence. It's not a question of time. It's not a question of if. It's a question of time when exactly it's going to happen. So again, I prefer to be conservative here and to wait for a clear break. Clear break, from my point of view, will be below this support line. I would prefer that RSI go below 50 as well. Just very, very doubtful it could happen that time. And in case it pushes higher, then my very high recommendation: pay attention for 13,200 level, because that could be straight band-to-band move on a very wide range with a perfect resistance and a perfect trend line which could meet us here. So from someplace I hope it could push higher to 13,000, 1200, maybe even a bit higher, 13,300. And then with the 4-hour charts monster divergence we already have, that would turn to be a perfect sell. And on some place I hope it could happen. I hope it will happen, because then a perfect sell will come. If not, as I said, break below the current support, and we can see that there is a trend line. So we break below support and trend line together should open the doors for the Dow Jones to move back to the previous low again, or maybe begin the next wave of the down move. Same relevant about the Nasdaq, of course. We have been band to band. We have a hidden divergence. It could push a bit higher. Someplace I hope it will to 27.15. Maybe, who knows, to 27.50 or 60. Be doubtful, but again, beautiful hidden divergence on daily and beautiful bearish continuing divergence on 4-hour chart. Every push up should be considered as a perfect sell. Pay attention to 27.10.15, and then if it goes, then 27.60 or so. This divergence combined with the daily divergence, daily hidden divergence, will create for us very, very perfect sell very, very soon. But alternative entry, of course, again we have a trend line and we have a support. If it makes to go below that together, it most likely will open the doors for a move down to the previous low here, and maybe even much lower right after that. Remember, with the indices, that's very, very sensitive because of the direct exposure to the fiscal cliff. We're talking about fiscal cliff in USA, so all the USA indices should be treated very, very, very careful. And another one very interesting, I've traded that here 3 or 4 weeks ago, and I don't actually remember, and I'm talking about the Swiss index, future SMI it's called. Not every broker allows that, but if you have it, it's perfect. We have an amazing continuing divergence on the weekly chart. We have a perfect resistance right here, right? And we have one bit higher right here, and one bit higher right here. So on each of them, most likely we're going to see a stop, and just need to look. That's a weekly chart, so we should go for daily chart and find our opportunities there. As so far, there is no divergence at all. So the current Bollinger Band break could bring us for a duplication or a bit higher. So pay attention for that. It's going to create very, very tough soon. A combination of weekly and daily should provide us perfect sell opportunity for the Swiss market index. I have been asked a lot about the gold, but I really do not know what to do. If you're about the soybeans, as I've been talking about that on my weekly reviews, it's right now playing around the 20 MA. It has hidden divergence created. There's a resistance. So if you attack the level I was talking about, the support, right now you should be on a very nice profit. And my recommendation: taking the money and stay aside. And again, friends, I just want to remind you: be very, very conservative. Be very, very careful. I don't see any reason why to risk well-profited trades during the week, during the last year, and risk them on such sensitive periods. So take only the very clear trades and protect yourself with very small lot size, of course. That's the way to be in the market, if you still want to be in the market for the end of 2012. With the fiscal cliff and the idea that the end of the year is here and the volumes are reduced dramatically, we need to be very careful. That's my honest recommendation. I know I'm going to be conservative here. So I wish you a wonderful week, friends, and good profits, hopefully, and good trades. Thank you very much for watching this video. Yours, Vladimir.